How good is that? That's what we do. We break rock with explosives. Very exciting. That's the Sand King portal, and we can't believe we didn't hit the drone. We got as close as we could to it. But first off, just a massive thank you for that awesome introduction, Christy. Thanks to Sharon for making Nick and Paul look good, as always, and putting on a great conference and the opportunity to present. And also following a few industry legends up there. So this is super exciting to be up here. And really what we're doing is we're moving out of the last couple of years as a business. We're in fix-it phase. We're moving out of that, and now we're into the sort of the value and the growth phase. So David articulated pretty well the disclaimer page, I felt. And really, if you look back at the last couple of years, it is a massive, massive shout out to the team on site. So when we're looking sort of FY23, we did 48,000 ounces. FY24, just shy of 70. This year we're talking about 100. But that comes from, you see, like breaking rock basically, but just a huge concentrated effort from the team, and basically a ground up rebuild from every area of the business. So every process, every basically system, every part of the business got pulled apart and rebuilt over the last couple of years. And where we've got to now, and if you look at sort of that growth chart coming up through, we're coming up. The exciting thing about this is still with predominantly open pit dirt. And the fundamental value shift of what we've done is we're switching to underground. And that's where the true value lies on this tenement package. What the open pits have left us, they finished in the June quarter. They left us with this excellent stockpile here. So we've got about 11,000 ounces in stockpile, and that really supports us as we're going forward and building the business. Corporately, we've never been stronger from a team perspective. We've got the board covered now. So we've just added Catherine Cutler as our final director. We've got all the disciplines covered that helps build a company. Really great dynamic at the board, very supportive of the growth pathway. The management team, Doug Warden's just come on board as the Chief Financial Officer. The rest of the team, genuine specialists in their field. Great team and fully committed to growing the business organically. And then the capital structure. So as Christy mentioned, $1 billion market cap. That's just, I guess, demonstrating the reward of what the team's done. We're moving from cash of 27 million into stronger cash flows as we move forward and build our second underground. So what do we actually have? And this is probably the crux of the turnaround story that we've spoken about. So forever and a day, this belt here it's only just northwest of Kalgoorlie. So if you're talking, that's 100 kilometres of strike just north of Kalgoorlie. And forever and a day, this is where the infrastructure actually became an issue. It had a pretty solid mill, but everyone got caught in the trap of trying to fill it with whatever they could find. So I created this hub and spoke operating model where people were just looking at open pit mining, and then they'd sort of get a few open pits going and start trying to fill the mill through that. The problem with that is it's a small mill, so 1.2 million tonne per annum, lower grade. Putting that in the mill ultimately ends up, you cap out at 70,000 ounces, which is really, really hard to sort of build a company off. So the operating thesis, and it's still kind of hard to imagine now when we look at it, is we're pivoting just to a pure underground play. And I'll show you some slides later, but these belts here are some of the most prospective, unfollowed up hits I've ever seen in my career across all these areas. And when you talk about up until sort of 2 years ago, less than 5% of the drill holes were drilled below 100 vertical metres. You can see why the value we talk about is purely in exploration. And you'll also see why we feel we're only just getting to the start of our journey, not to the end. So what does our business look like now? So I spoke briefly before. This is the 48,000 ounce year. This is the 70,000 ounce year, just finished FY23. We're doing 100 next year, and really it's to set up for that 150. And what that means from the cash flow position is you go from investing, breaking even with investing, making a bit of money, to making about $200 million in that year. And as Billy said, the pathway to cash flows is absolutely critical, because you think back of that tenement package I just showed you, you must have a balance sheet that can support liberating it. So you need a balance sheet that can just have continuous and sustained investment into exploration, and a strategy that is not quarter by quarter, it's multi-year to create value in the long term. So that's what we're really doing. The important thing to note on this as well, this is 1.1 million tonnes through the mill, 1.1, and this goes to 1.4. So you're still paying the same admin, the same haulage, the same processing costs. the same kind of everything. All you're doing is pivoting, this is low grade and this is high grade. So what we are is at a massive inflection point here, because that little yellow square there, that's all that came from the undergrounds last year. Goes to that next year and starts getting bigger. And then Sand King, which is that portal firing I just showed you, that's kicking in there. And then, and we're talking 10 months now, we're going to be at this run rate. So we're not talking a long way. And then ultimately what it does is it allows us to then partition out, aside from the cash flow, another $80 million that can get reinvested into the business. And what we're thinking there is about 40 mil exploration, 40 mil growth capital for what else we can find. And how are we going really? So far, like I say to people, like 2 years ago, we had $20 million in the bank, we're losing $4 million a month. It was quite unpleasant. In doing that, we've found 2 undergrounds. We've started one, or we've started both of them. We got one to commercial production, and then in the next 9 months, the second one will be in commercial production. And we've done that off about $15 million of exploration drilling. So when you look forward, from 2 years ago to now we've got cash flow, now we've got the team, now we've got 25 million this year and at least 40 million next year. The prospectivity and the capability and our ability to execute has gone up exponentially. And this is what gets exciting for us when we look at going forward. Riverina is our first mine. That's at the northern end of the tenement. It's really straightforward underground. I'll throw a few sections later. This is just this area here is just development ounces sitting between 1,000 and 1,600 ounces a month as you start developing. Then stoping kicks in. The important thing this is June here. This is the run rate that we expected for FY25. So we've ramped that up. June's performing well. Grade of 4.9 grams is above our reserve grade of 4.2. We are seeing a lot of high grade come through, but it's very early days. We've got to do a lot of drilling on this asset to see how it goes. How it presents like is it's narrow vein, but once again, you get this sort of ounce and 2 ounce dirt coming through in sort of 1 to 2 metre wide lodes. So really good. And then we see even sort of higher grades than that as we go along. And the mining's going really well. So narrow vein mining, we expect to do about 600,000 to 800,000 tonne per annum on that one. But really the kicker on this one is if we get these high grade zones extending, and we'll see, if this positive reconciliation continues. But when I say early days on this deposit, I cannot stress enough how we're in the infancy of locking this. So we've got 35 kilometres of drilling into this. This goes down to about 500 metres now. We're probably $50 million off calling this well drilled. So to say that we've unlocked nearly 500,000 ounce resource, we've got an 84,000 ounce reserve, but really all we've been drilling is this area here. And when you look at our data points across this area, that's 4 metres at 10. This is 2 metres at 12, 2.5 metres at 12. This is 6 metres at 17. And this system is tracked for 10 kilometres to the south. So what we want to look at is really, when we start thinking of this from a mining perspective, this is where it gets super exciting. So this 4 metres at 10, it wasn't a wild hole. It was a strategically placed hole that we hit the ore body within a couple of metres where we're expecting it. But what we want to look at is, does this become a decline corridor here? And does this decline come down here? Because every one of these decline corridors, if they come off, is worth plus 75,000 ounces per year. And the other thing we want to come down and do is test it down to 800 metres this year. Because if we do that, then we'll have a 10-year resource life. So I would say this year we've had one rig on it, the last 12 months, one underground rig. Next week we've got the second underground rig starting, and then we have 2 surface rigs starting on this. So we'll triple the data points in this system over the next 10 months, which is super exciting. But then the other exciting thing is this goes for 10 kilometres to the south. And I'll show you what I mean by what that looks like on a long section when people have only been looking at open pit things. The other thing to note about Riverina, even though it's narrow vein, we have these parallel lodes. So you have this ridiculous capital intensity. So very low. Decline comes down, goes in, and we can access between 600 and 1,200 metres of ore driving per level. And you can see that on this here. You get huge strike. So as we're drilling these out, we're seeing multiple loads stack up. We've got a drill drive to the south. And so it's not just one load going for 400 metres. We've got this continuous load and then stacked parallel as well. Moving to the southeast of the tenement, this is Sand King. You just saw the portal firing. We're in about 50 metres, so that's super exciting. That drill hole went in targeting the underground in October last year. So when you talk about Riverina from first drilling to cutting the portal was 9 months, we just did the same at Sand King, which is as quick as you'll ever see, and it's as quick as we needed to be to right-size the company to get where it is. But that's super exciting. That's a massive system when we look at it. And what we're doing is we're getting underground, same sort of thing, 300,000 ounce resource. That's just focused on that down to about 300 metres. This is wide open and stacked. This is wide open and stacked. Potentially this could be multiple declines in years to come as well, but we'll start drilling that one from the underground in the next couple of months. So basically we've got all the catalysts in play for us to be able to deliver the 150,000 ounces, and then we've got all the investment set aside for the continued drilling and the exploration. And what it looks like just from a Riverina perspective, so what I showed you before, this was the area I just showed you before from the mine perspective. And then this is the trend, and you can see just over 10% of the holes have been below 100 vertical metres. And all these lines up here, they're just tenement maintenance lines over the years because the company's been undercapitalised to deliver. But basically all that gold's come from all down here. So what we're just systematically doing, that was at 4 metres at 10 I showed you before. We're just going to walk along and we're just going to test this down dip extension. But the continuity of this structure and the high grade nature is rare. And the general rule with this type of structure, monolithic structure, is they're as deep as they are long. So we expect it to go deep and we expect it to go long because we've proven it. So that's super exciting. Another one which I haven't even sort of delved into, and this Mulline trend, which sits about sort of 5 k's just to the west of Riverina, it once again goes for that 10 kilometres, but less than 10% of the or less than 5% of the drill holes below 100 vertical metres, which is there. But this could float an exploration company in its own right. And when you look at the holes that have never been followed up, 6 at 10, a metre at 245, 5 metres at 30, that was all tenement maintenance work. And if you're an exploration play in gold and you came up with any of these, you'd be onto something. So we've got this one and we've got 3 other trends that I'm not even going to go through today to talk about what we've got. So our value is very much still an exploration play. The difference now is we've got the business right sizing where we'll make really strong cash flows, and we're actually then in position to self-fund the exploration, but then also to really continue to grow the business. So what we want to look at is, like I say, we're not at the end of the journey. We are only just getting to the start of this journey, and that's what we're really looking forward to. The other thing is that as the company evolves and matures, sustainability, just getting that embedded. And like I say to people, it's not something to overthink. It's just being a good corporate citizen. So not just telling people what you're going to do, you have to listen to all your stakeholders and continuously try to achieve what the outcomes that support them and also make the business a better place to be every day. So really going forward, so we're on the journey of that change in strategy, and it's a fundamental shift across that belt that's never been done. So that's sort of, I guess, the value proposition. We're really trying to establish a brand of delivering on what our metrics are and what we say we're doing. So when I first started talking about going underground and that a couple of years ago, it was, given the history of the belt, it was sort of mildly amusing to people. It's certainly not amusing to them now because people are seeing us deliver consistently against what was pretty strong headwaters, and it's certainly not a couple of years we want to do. But as a team, we've come out a hell of a lot stronger because of it, and people are really keen to see that value liberated. When you're talking year-on-year growth of 40%, that's unheard of. And that's what we're trying to do for 3 consecutive years, and if we get success, probably beyond that. So it's not to be understated how important that is. And just this year to last year will be a 50% growth. So that's pretty phenomenal. And then just like I said, the value, we've actually got the funds allocated now and costed into our corporate planning. It's not just, when we get money, we'll go drill this. It's embedded, all our strategies embedded, all our costs are allocated now. So we're in a position where the values or the value drivers are all in play now. All our catalysts to create value, first underground and commercial production, second started, drill bits are turning, the infrastructure and team to support, they're all in play. And so now we're not sort of waiting to start something, now it's like continuing to execute and see what it turns up. So really looking forward to the next 12 months, hope to be back here in 12 months to keep you guys updated, but it's been a really exciting year and it's great work by the team to get us where we are. Thank you.